All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we start today's podcast, just a quick reminder as to how we start all of our podcasts. Nothing in this podcast or any of our other material should be taken as investing advice. We frequently talk about companies that are trading very volatile, and you should always do your own research and consult a professional before making any investment decision. Either James or I could have any position in any of the stocks mentioned at any time and change it without notice. So make sure you do your own research before making any investment decision. With that being said, we've done a couple of podcasts in the past regarding the quantum computing industry, which we have some very serious concerns with in general, and specifically IonQ, which has some very serious concerns in particular. But today we're going to revisit the quantum computing industry with some recent developments that elicit the thought of an abandoned ship type scenario. So, I mean, really, what you would expect from an industry that, after decades, yet still has not produced a single useful quantum computer, and it's really showing signs of well, you could make comparisons to rats fleeing a sinking ship. So, James, with that being said, do you want to get into some of these recent developments?
Yeah. The first development was quite recently, a couple of weeks ago, on October 23rd of this year. The co-founder and chief scientist of IonQ, Dr. Chris Monroe, who was they held him up as the great genius, the pioneer of quantum computing. It's a huge competitive advantage that IonQ has, that they have the great genius Dr. Chris Monroe as their chief scientist. Well, on October 23rd, they announced that he was resigning. And they said that Dr. Monroe will be returning to his academic, research, and policy pursuits. He will continue to lead research in quantum computing technology, educate the quantum workforce, and advise quantum institutes across the world. So he is still going to be involved in quantum computing, but he is leaving IonQ to return to academia. So there's a couple of weird things about this. They say returning to academic research, but he's actually never left academia. During the whole period where he was chief scientist of IonQ, he concurrently still maintained his jobs as professor at University of Maryland and Duke. So he's been a professor this whole time. So the idea that he's stepping down from IonQ to return to academia, it's just not true. So that's the first kind of weird thing. The second thing, if you watched our previous videos about IonQ, they have made all these claims saying that they have the best quantum computer in the world, the most powerful technology, whatever. And we talked about why we think there's some serious issues with those claims. But if we took it at face value, IonQ is the best quantum computing company ever. They have the best technology. And if Dr. Monroe still wants to be involved in research of quantum computing, what better place to do that would be this IonQ company, which he co-founded and supposedly has the best technology, right? Obviously, I would think if you want to do research on quantum computing, you'd want to have access to the best quantum computers and the best technology, but apparently that is not the case. So that's another red flag. Another thing is Chris Monroe, since IonQ went public, he has never purchased a single share of the stock, but he has sold hundreds of thousands of shares. And I'm excluding stock grants and share-based compensation he received. I'm talking about just going into the market and using his own money to purchase shares. That has never happened. He has only sold shares. And on June of 2023, just a few months before this, him resigning, he sold 200,000 shares, which is one of his largest share sales to date, cashing out for $2 million. So when you have the chief scientist and co-founder abruptly resigning from the company, and the explanation, as I just talked about, doesn't really make a lot of sense, well, that is a huge red flag, in my opinion. So we've talked a lot about IonQ in the past. So in all of the concerns that we raised in our previous two videos, they still stand. IonQ has not clarified anything that would reduce our concerns. But today we want to focus on yet another publicly traded quantum computing company called Rigetti Computing. And this is a smaller company. IonQ has a market cap in excess of $2 billion. This one only has a market cap of $150 million, and that's quite obviously, you see here, the share price has declined by almost 90% since the SPAC. Now, so this, in terms of share price performance, this one has done far worse, and we're gonna get into in this presentation why we think Rigetti is probably on the fast track towards bankruptcy. So Rigetti Computers, they have a lab, or they call it a fab, in Fremont, California, where they develop their quantum computers, both for themselves to make their own quantum computers, and they also create what they call quantum integrated circuits, which they sell to external customers. So they both sell the devices, and they also make their own devices, which can be rented out. People can pay to use their Rigetti's own quantum computers as well. So, like all quantum computers, Rigetti's quantum computers are useless. And we talked about this in the previous videos, but I mean, here in Rigetti's own investor presentation, they admit it very clearly, right? So, all of their current customers and applications of quantum computing are classically reproducible. That means everything that their customers are experimenting on with the Rigetti's quantum computers could be done with a regular computer. So there's for like a far cheaper price and far more easily. So just like with IonQ, all of their customers are just doing very early stage experimentation. There is no real world application yet. And the question for Rigetti is, can they get to a point where they have an actually useful quantum computer before they run out of cash and declare bankruptcy? So one thing I've found it's always very interesting to do when you have companies like Rigetti, which went public by merging with a SPAC. All these SPACs in their initial SPAC presentation, they give all types of bullish future projections about revenue and technological advancements. And now that we're well over a year down the line, it's always interesting to look back and see the reality versus their projections. So in their 2021 SPAC presentation, they claim that they expect to reach narrow quantum advantage by 2023. So narrow quantum advantage means that the quantum computer can do something of practical usefulness that cannot be done by a regular computer. So they said that they would achieve that by 2023. So now that we're in 2023 and this has not yet been achieved, and they created a new investor presentation, which gives a timeline. So it gives a timeline from 2019 through 2023 of the things that they have achieved. And then you have narrow quantum advantage all the way out here, and they do not give any timeline. They do not give any timeline of when this will be achieved. They just say that it's some point in the future. So here they were saying 2023. Obviously, things have been progressing far slower than expected, because now they're just saying we will achieve quantum advantage at some indefinite period in the future. They're not even going to try to guess when this can happen. And as Ryan said at the beginning of this video, kind of the theme of today's presentation is rats fleeing sinking ships. We already talked about Chris Monroe resigning from IonQ. Well, this happened late last year. Dr. Chad Rigetti, the founder and CEO of Rigetti Computing, he abruptly resigned from the company. And for Chris Monroe at IonQ, at least he gave a BS reason, saying he's returning to academia, even though he never left academia. But with Dr. Rigetti, they literally gave zero explanation. They just said, Dr. Rigetti has provided the company his intention to tender his resignation as the company's president and chief executive officer and director. So Zero explanation given. Again, it's a huge negative signal, because if things were going great and the technology was advancing, why would you leave the company, especially the company that you founded and is even named after you? Um, the fact that you're leaving the company probably means, you can see the writing on the wall. It's not working out, and does not have any great likelihood of working out. And just like with Dr. Chris Monroe, Dr. Rigetti has also only ever sold shares of the company. Again, this is excluding his own share-based compensation, but as far as making a proactive decision on whether to buy or sell, it's only been sells. And so when you have huge insider selling and then the CEO resigns, that is a huge red flag. So despite the fact that they have not achieved quantum advantage, they do have some revenue. And more than 80% of their revenue comes from government entities, and of those, the vast majority are U.S. government entities, U.S. government agencies. And we talked about in our previous videos that the U.S. government is investing huge amounts of money into quantum computing, but it's not really done on a rational basis with thinking about risk and return. It's more done as a reactionary thing, as they don't want to fall behind China. But so, what specifically is Rigetti doing for these government contracts? Well, they have development contracts, which are multi-year, non-recurring arrangements, which they provide professional services regarding collaborative research in practical applications of quantum computing. So how it works is they sign these deals with government entities, be that the Air Force Research Lab or whatever. They'll provide some of quantum their quantum hardware that they create, and then their scientists, along with the government scientists, will do some tinkering and experimentation. Um, but this is basically the extent of what they're doing. Is they're basically a research consultant helping the government do quantum research. But as we've talked about earlier, thus far they have not been able to achieve anything useful with this research. It's all very early stage. And in their financial performance, they generate a couple, $2-3 million of revenue per quarter. And because they have all these various contracts with governments that they reach milestones and whatever at various times, the revenue is very lumpy. But if you look at it over the past few quarters, it hasn't really been growing. It's been staying flat at about $2 to $3 million per quarter, and their operating loss is well over $15 million per quarter. So this company is bleeding cash. The revenue is not growing, and when you're just doing these early stage experimentations with no real world applications, there's a limit to how much anybody's going to pay you for that, even the government. So until they can achieve quantum advantage, the revenue is just going to be basically flat, and they're going to continue to lose money. And again, the question is, will they be able to achieve quantum advantage um, in, before they run out of cash? And the financial position of Rigetti is getting desperate. They have $105 million of cash on their balance sheet as of the end of the second quarter. And they said that in their own guidance, they say that by the end of the year, they expect that cash pile to decrease to $70 million. So they're going to burn $35 million over the second half of the year. So that implies a cash burn rate of $70 million per year. And they also have $13 million of debt that is coming due in 2024. We'll get into that shortly, but they'll have $70 million of cash by the end of the year. They burn $70 million a year, so by the end of 2024, they will have zero cash, and they still have this debt that they have to repay. So in 2021 and 2022, Rigetti borrowed $28 million from a company called Trinity Capital. And Trinity Capital, it's a company that specializes in lending money to early stage kind of venture backed companies. And these loans that they borrowed, the $28 million, is at an extremely high interest rate. So it's at the U.S. prime rate plus 7.5%. So the U.S. prime rate is the rate of interest that banks uh, charge to basically customers with perfect credit scores, or say if you're a AAA rated company, um, or you would be able to borrow at the prime rate. And with the Fed's recent interest rate hikes, the prime rate has increased to 8.5%. Now, to account for the higher level of risk, seeing as Rigetti is an early stage cash burning company, Trinity demands another 7.5% on top of that. In addition to this very high interest rate, there's also some debt issuance costs and various fees that are amortized across the lifetime of the loan. And when you consider all of those, as of the second quarter of 2023, the effective interest rates on these loans is between 21 and 27.6%. So these are extremely expensive loans, and the fact that they were willing to borrow this money at such a high interest rates gets shows kind of how desperate they were to raise capital, which they need to raise capital to survive, as they are burning money. And they have 5.5 million of these loans due throughout the remainder of the year, and then they have 13 million due in 2024. Now, this means they're going to have to raise cash in 2024, but given how much the stock price has declined, this could be difficult. So they have an investment bank called B. Riley, which kind of specializes in smaller cap, more speculative companies. This investment bank, Rigetti uses them to execute their share issuances when they need to raise more capital. Now, B. Riley, they stipulate that they will not sell stock if the share price is less than $1 per share. So B. Riley is not in the business of selling penny stocks. For Rigetti to issue new shares and raise equity capital, they need to have their share price above $1. Additionally, you have to have your share price above $1 to remain listed on the Nasdaq. So, and if we look at the current share price, it's hovering at around $1.14. So, a small decline in the share price, and then they could be delisted, and they wouldn't even be able to raise additional capital because B. Riley then just wouldn't do business with them. Now, of course, this is a solvable problem. They could do a reverse stock split to increase their share price, but when your share price is falling this much, it's definitely a bad sign. And their market cap is currently only $150 million, roughly. And as they're burning $70 million per year, that is almost half of their market cap that they burn every year. So if they're going to continue to fund the business, they'll have to increase their share count by 50% per year, which is an unsustainable situation. And it's also important to remember that this company, Rigetti Computing, was founded in 2013, 10 years ago. And to date, they have not been able to achieve quantum advantage. No quantum computing company has ever achieved quantum advantage. And they only have 1 year left of cash, well, a year and a half left of cash. And given how much their market cap has declined, they don't really have that much runway to issue more stock and fund their operations. So it's been 10 years. They haven't been successful developing the quantum advantage, and then they only have 1 year left. What's the chances in this last year they're going to be able to do something that they haven't done in the past 10 years? Another thing is, in February, they laid off 28% of their staff in an effort to conserve cash. And that 28% uh, of the staff was 50 people. So now they only have, what is that, like, 150 to 200 people left at the company. And um, as they lay people off, they have less ability to actually make progress and do research and development. So they're running out of cash. Their headcount is decreasing, so they have less ability to innovate. The founder has left, and I really don't see any way that this company is going to survive, given how tight the financial situation is. And I think, you know, this gets to the point, the stock is already down 90%, but um, if the stock is going to go to zero and you short it, well, that's still a 100% return. It doesn't matter how much the stock has already decreased. So, in my opinion, I think this is a great candidate for a short position, because given the desperate financial situation, I don't really see any realistic path for this for a turnaround.
So James, if you were the management of this company, and you knew that the things are getting desperate and you have less than a year runway left, what do you think would be the responsible thing for the management to do with their remaining net cash?
Yeah, so I mean, I guess it's a bit of a there's really two routes that you can go. The first route is to try to survive for as long as possible, and that would entail trying to issue more stock. Do a reverse. If the share price goes below $1, which it's quite close to, you do a reverse stock split. You raise more capital, but that's really only going to last you. Currently there's 1 year left of cash. If they do a big equity raise, maybe they could get another year, so they have 2 years left. It's still not enough time. Um, turn things around. And when you would have to dilute your market cap by 50% per year just to fund your current rate of cash burn, well, it's pretty obvious that it's failed. The only other option would be to try to wind down the business, liquidate it, and return cash to shareholders. So currently, the net cash position is 80 million. That's as of the end of the second quarter. So that's decreased by now, but I mean the market cap is still greater than the net cash. So if you were there would be significant costs associated with liquidating the company. So if you were to, let's say you liquidate the company, return cash to shareholders, you have $80 million of cash. Maybe they have some real estate or small stuff they can sell, but then there's going to be some transaction costs and whatnot. So uh, you would not be able to get the current market cap by by liquidating the company. But if you play this out, then the stock price is going to go to zero. So returning at least some cash to shareholders now is probably the best decision for maximizing shareholder value. But of course, that's never going to happen because the management team has no incentive to do that. They want to drag this out as long as possible so they can continue collecting their salaries. But we've really reached the end game here with Dr. Chad Rigetti already having jumped ship.
Yeah, I then my next question was going to be which of those two routes is most likely for management to go down. I don't know. Have you ever heard of a company, like, when was the last company that you remember that actually management wound down the company and just threw in the towel and said, here's what we like, okay, shareholders, here's what we have left, take this money and do something else with it?
I cannot
Has that ever happened
recall.
that you can remember?
I have not. I'm sure it's happened at least once, right, in the history of the stock market, but I cannot recall. I have never come across any example of that, and I have looked at a lot of companies with unviable business models. I mean, that's basically all we do. The channel is called Broken Business Models.
So is in your opinion, like Rigetti is not the only company in this industry, right? Like
Mm-hmm.
we've also talked about IonQ. I think there's a couple of others. Is Rigetti like a is Rigetti and IonQ like a representative sample of the entire industry, or do you think maybe the big guys IBM and Google could make it work? What are your thoughts about how
Well,
localized this is?
my thoughts are IBM and Google. They obviously have way more cash, and they have their own core business, which is profitable, so they can continue funding. Google and IBM can continue funding their own quantum segments almost indefinitely, um, so they can burn an almost unlimited amount of money. That is not a luxury that IonQ and Rigetti has. Now, from the research I've done on quantum computing in general, uh, nobody, not Google, not IBM, nobody has reached quantum advantage. They've been at it for well over 10 years now. And I honestly think it's just a giant waste of money. Now, for Rigetti, we're reaching the end game. Eventually, investors are going to stop buying their stock. They're not going to be able to raise capital, and they will have to go bankrupt. And this whole project, this whole cash furnace will finally come to an end. In a case like Google and IBM, they're just going to keep spending money for years to come. But I mean, obviously, as if you're Google, as a percentage of your market cap or a percentage of your cash position, that's money you can afford to burn. But I think this entire industry has been only destructive to shareholder value.
So what is there like what is the argument to buy one of these pure play quantum computing companies like Rigetti or IonQ, like instead of just buying one of like IBM and Google and getting exposure through them?
Well, I mean, if you really believed in this quantum stuff, you really believe this is going to be, a huge industry and a huge success, you would want to do a pure play because the upside would be far greater. Let's just say, hypothetically, say Rigetti and Google's quantum computer are going to be of the same value. Say it's going to be worth $100 billion. They're going to solve the quantum computer and they're going to do all these great things with it, and then the quantum computing business will be worth $100 billion. Well, obviously, if you buy a stock at $150 million market cap and it gets to some and it becomes like a huge success, the stock price could surge hugely. Now, if you're Google and you have your quantum computer and it actually works, uh, and it becomes $100 billion business, well, Google's market cap is already like $1 trillion, so you only make 10%. So that's the difference. But I mean, for me, I think it's basically a moot point because I do not believe that this quantum computing will ever be a viable business within our lifetimes. We haven't really gone into the technology of quantum computing and our concerns with it in this video because we've already discussed that in pretty good detail in our previous two videos about IonQ. But I am just hugely skeptical of the industry in general. So, with that being said, that's about all we had to talk about for today's video. If you have any thoughts on the quantum computing industry in general, or these two companies in particular, if you have any disagreements or differences of opinion, please let us know in the comment section below. And with that being said, we'll sign out for today and see you on the next one.